There is a lot of activity happening in the real estate market as the COVID-19 pandemic is being brought under control. The biggest contributor to the sector is the Real Estate Investment Trust, better known as REITs. People are increasingly interested in this new option of earning returns through rent in commercial properties. A report from ICICI Securities shows that in the first half of the financial year 2021-22, REITs gave a return of 99%. In the second quarter, the lease business grew by 140% to 135 million square feet. Indications suggest that the business of REIT may increase rapidly in the coming days. So, what are REITs and how do you invest in it? Check out this video to know all about REITs.
Amit's father, Amir Chand, is a worried man these days. He used to believe that real estate is the best investment option. But COVID-19 poured water all over his plans. A flat bought 2 years ago is not fetching the same amount today, let alone a premium. But Amit went 2 steps ahead. Following the advice of his financial advisor, he invested in real estate investment trusts, better known as REITs. From April 2019 till now, he has got returns of 21%, which is good considering the declining realty market. REIT is an investment in a trust without actually buying any property. You don't need lakhs of rupees to invest in REITs. Investing in REITs is similar to that in mutual funds. REITs have made it easy for people to invest in property. REITs not only provide higher returns but also shun away the burden of finding a property, paying EMIs and maintenance costs. REIT companies handle all of this. You just have to concentrate on gaining returns. Now, the question arises, how does a REIT work? Understand it like this. ABC company launches a REIT. Just like mutual funds, it will take money from people and invest that in a rental property. The property will pay its rent to ABC company, and with this earning, you will get returns on your investment. So, what is REIT and how is it changing the investment landscape in real estate? REITs are of 2 kinds. One which is listed in share market, and second, mutual funds, which are also called fund of fund. In listed REITs, you can buy and sell just like stocks, and you can start your investment by buying 1 share. On the other hand, fund of fund invests in global REITs. This means these give you returns by investing in properties in foreign countries. Like mutual funds, you buy 1 unit of this and the minimum amount of investment is Rs 5,000. India has 3 listed REITs: Embassy Office Parks, Brookfield India and Mindspace Business Parks. Since their launch, they have given returns of 8 to 21%. Similarly, there are 3 fund of funds in this market: Kotak International, Mahindra Manulife and the recently launched PGIM India Global Select Real Estate. Kotak International is the oldest in REIT fund of fund. This fund of fund invests in REITs of Hong Kong, Singapore, Japan and Australia and gives returns in accordance to the markets there. Just like stock markets and mutual funds, SEBI is a regulator of REITs. As per SEBI's regulation, 80% of the investments should be in ready-to-move and rental properties. Listed REIT, on the other hand, has to give 90% of its return to the investor. Investor will gain returns in the form of dividend and interest. All REITs invest in commercial property. RBI has also given permission to FPIs to invest in REITs. Kirtan Shah, co-founder of SRE Wealth, said that REIT gives an opportunity to invest in real estate at a lower cost. One can have 5% of REITs in their respective portfolios. Those investing in listed REITs get more benefits in terms of tax and earnings. The interest and dividend paid on quarterly basis in listed REITs are tax-free. SEBI registered investment advisor Jitendra Solanki said that not every retail investor will be able to bear the risk associated with the market. Hence, it is better to invest in global REIT fund of funds. In a listed REIT, you buy shares of one company. However, in a REIT fund, you invest globally, and that too in well-performing companies. So, what did Amir Chand learn from Amit? You can invest in real estate without even buying a property. It is not necessary that you should have lakhs of rupees as savings. You can start investing in REIT with just 5,000 rupees, or you can invest in listed shares by paying the price of one share. Money9 recommends. REIT is a new investment option in the market. It is important to do your homework before investing. Like mutual funds, this investment can also be risky. Get a good grip of how big this risk can be. Include REIT in your portfolio, but make sure that the entire money is not invested in this option only.